Is it worth buying AT&T stock in 2022? What's going on with 5G deployment, the deal with Discovery, and how much dividends the company will be paying in the future? Recently, carriers and aircraft manufacturers asked the telecom companies to postpone the launch of 5G, but they refused. Airlines claim that the frequency of radio waves used to transmit 5G signals is close to those that are used by some airliners to determine altitude, and this is a safety hazard. The telecom companies refused, and they believe that there is no danger. Signal strength levels are low enough to carry harmful interference. Some other countries have already deployed 5G. And so far everything's fine. But if the airline's claim turns out to be true, they will be dealing with large financial and material losses, and the telecoms will ruin their reputation. We can only hope that everything will be fine. On December 28, AT&T announced that the company had received a favorable ruling from the IRS, signaling the deal to combine Warner Media with Discovery would be tax-free for shareholders. In May 2021, the companies had announced an agreement to combine Warner Media's assets with Discovery's entertainment and sport businesses to create a new publicly traded company that would be named Warner Bros. Discovery. Right now, AT&T basically has two businesses, communications and Warner Media, that AT&T acquired in 2018. And that was a terrible deal, because the company's competitors, Verizon and T-Mobile, achieved similar results with joint promotional offers with Disney Plus and Netflix, without buying any companies and paying billions of dollars. So they were able to use the capital to build 5G infrastructure. So AT&T only accumulated a large debt, and the competitors gained an advantage in the core business. Buying Warner Media was a mistake, so this deal with Discovery is totally reasonable. It will help AT&T to prioritize its core business and reduce this huge debt, because AT&T would receive $43 billion in a combination of cash, debt securities, and Warner Media's retention of certain debt. However, as a result of the transaction, the company loses a significant part of its cash flow. Therefore, it was announced that after the allocation is completed, only 40% of free cash flow will be directed to dividends. This is lower than before. In 2020, the company spent 54.5% of free cash flow on dividends. According to the forecast, in 2022, the company's free cash flow will be about $20.5 billion, which means $8.2 billion will be spent on dividends. The number of shares outstanding is 7.2 billion. 8.2 divided by 7.2 equals 1.13. This is the estimated annual dividend. The current stock price is $27.18. So annual dividend yield will be 4.2%, and it's pretty good for such stable, low-risk company. However, the company has not yet officially announced a dividend cut, and we also don't know whether the number of AT&T shares outstanding will change after the spin-off. I also want to say that a dividend cut is not actually a bad thing. The company will have more money to develop its core business and also have better financial stability. When companies spend too much money on dividends and buybacks, they often end up in a very bad situation. And AT&T actually is the example. The company were spending too much money on dividends and then made a mistake buying Warner Media, so it ended up in a bad situation. However, I think and hope the bad times for AT&T are ended, and considering the valuation ratios, price to sales is 1.1, price to book 1.2, forward price earnings ratio 8.3, this stock is a reliable dividend payer for a fair price. Which is why I purchased this stock in December 7, a little bit more than months ago. So thank you for listening. If you are interested in more neutral, detailed, fundamental analysis of companies on the market, you can subscribe to this channel.